Hey everyone, we're here with Jason Kohlberg at Best Home Financial, and we're just going to chat today about some of the things happening during these unprecedented times with mortgages and how that relates to, financing with a real estate purchase. How you doing, Jason?
Doing well, thank you.
Awesome. Is it yucky and rainy over there?
It definitely is.
Okay. So obviously one of the biggest questions right out the bat are, what would you say are some of the biggest reasons that you're seeing financing fall through right now for buyers?
I personally haven't had a lot of fallout at all during this time. Luckily, my company has stayed the course. We have not changed any criteria for lending on any programs or anything during this time. A lot of lenders out there are changing the criteria. A lot of lenders have increased minimum credit scores during this time. It's very volatile right now, and insuring government loans is very dangerous right now, or I should say lending on government programs, because the Fed is not insuring it at the rate they normally do. And with the unemployment rates skyrocketing, it's obviously very volatile and very risky business right now getting into that with the first-time buyers. So I've been very fortunate, but there are a lot of changes happening. A lot of lenders have increased their scores to 700, 680. A lot of the mortgage insurance companies are increasing criteria. It's just a lot riskier right now to lend. But luckily, like I said, it's business as usual for me.
That's awesome. So what I'm hearing you say is perhaps if someone has had their financing fall through with another lender, you might be a good person to reach out to, because it's a possibility you might be able to help them.
Absolutely. Yeah, I've been picking up a lot of pieces of transactions that have fallen apart. People getting the rug pulled out from them a week before they thought they were closing, just because the lender increased their criteria effective immediately.
Wow.
So yeah, that's happening.
Well, I can't imagine how discouraging that would be for someone, that close. So we're fortunate that we have someone like you in the area that, maybe they can fall back on and keep that deal going through. So that's awesome. Another question that someone had asked me was, during all this COVID-19 stuff, and we're seeing, again, unprecedented amounts of unemployment occurring. I had a buyer specifically ask me if they had to file for unemployment due to job loss, which is, it's temporary from the best that they can tell. Once they get back to work, they can show they have viable income coming in. Is it going to negatively impact them long-term if they used unemployment benefits? Like, is that going to affect their credit or anything like that? That was a question someone had.
It will not. It is totally acceptable. Obviously, these are unprecedented times, and yeah, that's not going to affect anybody right now. The only people that could have an adverse effect on would be self-employed people that I can think of, or people who have variable income. In other words, they're not hourly or salary. We have to use averages. Unfortunately, we cannot use the unemployment calculation into an average. So that could affect those people more, but people who are hourly and salary, once they're back to work, we can use their regular hourly and salary rates.
Gotcha.
So
that's good to know. That was not something I would have thought of even. So, would you say that rates are still good for, new purchase and refinancing?
Absolutely. Rates are at 50-year lows right now. It's unbelievable. I mean, the buying power right now is substantially higher than it's been in the 20 years I've been doing mortgages. People who qualified for $100,000 mortgages last year are now qualifying for $130,000 mortgages with the same payments. So
that's a huge difference.
Oh yeah, a lot more buying power, bang for your buck for sure.
Yeah, as Lars likes to call it, money is cheap right now.
That's right. And it's also tax deductible on your primary residence. So,
yes,
you get money like that right now, right?
That's good. So, obviously with everything that's changed, would you say that there has been an increase in closing times from the time that someone's offer gets accepted to, closing day? Have you seen that increase exponentially, or would you say that stayed about the same? And can you also touch on those federally insured mortgages, because obviously those sometimes have to go to an additional underwriter. Have you seen that drastically change things on your end?
To be honest, my company is definitely more focused on the purchase side of things. So we definitely make those take precedence. So we're, if we get a purchase and we do everything we can to make sure that that moves as quickly as possible. And I mean, we had one that we got in April 1st and we closed on the 20th. Never met the person. They never saw the house. It was pretty unprecedented for me, but it's going really smooth. The hardest part is the appraisers, because the appraisers are busy doing a lot of refinance appraisals right now, but we do have specific appraisers that we have indicated that are that we're focusing just for purchases in a rotation so that we can keep that business going smoothly.
Awesome. That's good to know, because I know there are a lot of lenders out here that are struggling with that timeline due to, some of those factors, and they may not have that luxury of putting new purchase ahead of refinances. So again, it's good to know we do have an option out here with you. So are there ways to work around someone who has maybe been furloughed, a temporary leave of absence for work that's mandatory? I know one of the big ones around here is Whirlpool. They're just kind of telling everyone you have 2 weeks that you have to take. And so are there ways to work around that if you're needing to get a verification of employment and you're, trying to figure out how to navigate through that underwriting process and so forth?
There's not necessarily ways around that, but they would have to be back to work before they could actually close. But it's, Whirlpool specifically, like you said, they are actually able to schedule their own furlough. So they have 2 weeks they have to take between certain dates. So they can kind of schedule around it, and they could actually get into a contract, make an offer. We just wouldn't be able to close until they were back to work.
So yeah, we would just want to make sure, say someone is closing May 30th. They may want to take that furlough the first couple weeks of May so that they can get back to work and show, yep, we can get a verification of employment.
Yes, and the verifications of employment are not like they normally are right now. We're having to get a direct email or something in writing from the employer within 5 days of closing to say that they're still employed at their regular, pay and hours and all that, because there's a lot of hours being cut even on people who are working right now. So
sure. So that could be a little bit of a hiccup for, things on the back end of.
Yes, okay. People are having hours cut, not working as normal right now. And so I haven't had, luckily, knock on wood, haven't had that problem yet, but I could see it happening for sure.
Okay, good to know. People who are maybe contemplating or already have taken advantage of what some of these mortgage companies are offering for forbearance. Can we talk about why that may be something, if they possibly can, they might want to stay away from that if they're thinking about purchasing in the future, in the near future?
Yeah, absolutely. Forbearance, a lot of people are confusing that with deferment. It is not a deferment. It is a forbearance. A forbearance basically means, and this is coming from the Fed, they're going to allow you to forego up to 3 months of payments, basically for forbearance. But at the end of that 90 days, you're going to owe all 3 of those payments plus your current payment. So it's not the same. It's not added to the back end of the mortgage. It's not forgiven. There's a lot of misleading information out there, and people are very confused by that. If you can make your payment, make your payment, because you have to make it, it's going to come to crunch time and you're going to have to make a big lump sum all at once, or you're going to be in trouble.
That's my biggest concern with people taking advantage of this, is they don't realize on the back end of that what that's going to look like. And hopefully we can just, even in this video, help educate people about that a little bit more. So
that should be for emergency use only.
Right. That's not a get out of jail card for 3 months to go shopping instead.
Absolutely not. No, don't take advantage of it unless you have to.
Right.
Yep.
Which obviously, ideally, if someone is in that situation where they're having to take advantage of that, they're probably not going to be looking at purchasing a new home right now anyway. I mean, that would be my guess,
True.
So, just from your own professional opinion, and this may be difficult for you to give an answer, but any idea on how long you think some of these other lenders that are out here, you know, tightening restrictions, any idea how long that may play out?
I mean, there's a lot of speculation on that. The biggest issue with a lot of what we call lenders is that they're not actually lenders. They are not direct lenders. They are correspondent lenders, or they're brokers. So they answer to a higher power. To give you an example, like US Bank, a lot of local banks answer to US Bank. So when US Bank raised their minimum criteria to 660 on any program period, a lot of local banks had to change their criteria too. So they have to answer to them. I have the advantage that we're a direct lender, so we make the rules, luckily. I don't have to answer to a higher power, and I have a meeting every day with my corporate people, so I know what's going on. But yeah, there's a lot of that going on, and the problem is that these larger entities, it's very risky for them to extend credit to these other local banks and credit unions, because they can't keep their finger on them and make sure that they're doing their due diligence to make sure people are employed within 5 days, to make sure nothing has changed, you know, just to protect the entity.
Right.
So yeah, it could go on for a while.
Oh boy.
So.
So yet again, you know, more motivation for someone to seek out someone like you who, you know, you're a direct lender, you have more control over some of these aspects that we're seeing, you know, other people struggling with and dealing with, and the radical changes all of a sudden.
Yeah, just to give an example, I can still help people with no credit score. I can help people as low as a 580 credit score in some cases. A lot of the bigger banks, very large banks, I'm not going to name any names just because I don't want to get in trouble. But one of the largest banks in the world actually just announced, if you don't have a 700 credit score and 20% down, don't even bother applying with us. So that's happening too. So,
which I'm trying to wrap my brain around how many people now would not be able to get financing, because that cuts off such a large number of the population, you know.
That's the way it was at one time in history, where everybody had to have 20%, you know, so a lot has changed, obviously. I mean, I do a lot of zero down loans, but, you know, not every lender does government programs, so.
Right. Well, let's talk about some of those zero down loans just for a second. So what are some of those options that may be available for, you know, buyers who say, I don't have any money to put down on a property or on a new purchase? What might be some options for them?
Well, of course, if you're a veteran, the VA mortgage is a great option for a veteran. That's zero down. The USDA Rural Development Loan is a zero down that is extremely popular for a non-veteran. It's the closest thing to a VA mortgage a non-veteran can get. It does have some income limits for your household and some geographical restrictions, but for the most part, it's available in all of Berrien and Van Buren County, or most. So,
and I know,
really popular.
And I know we do a lot of those. We do a lot of rural development. You and I, we do a lot of VA. We do a lot of FHA, which isn't zero down, but it's darn near as close as you can get to zero down.
Yep.
Which FHA is 3.5% minimum down, correct?
Correct. Yep. On all of those programs, you can ask the seller to pay all of your costs and escrows typically. So I actually had a closing this week on a USDA loan, and the people got their keys and a check back at closing.
That's awesome.
They're pretty excited about that.
Yeah. I mean, because there's so many buyers out here that, you know, they have a good credit score, they have a good job, you know, it's not that they're irresponsible people, but you never know what's happened in someone's life that has depleted them of their savings or whatever. And it doesn't mean they're not going to be a good borrower and a good purchaser. So it's great that we have those options out there.
Well, and another thing you know, based on what you just said there, a lot of lenders, specifically banks, credit unions, they will only help people with an automated approval. So in other words, they gather all of your information, all of your documents, they put it into a computer system, and it's going to say approved or denied. And if you're approved, they can help you. If you're denied, they can't help you. My company, we actually do manual underwriting. So we have people that make decisions, not just computers. So that's a huge advantage too, because we can give a story. We can write a letter, an explanation of here's why this happened. And actually use common sense, which is nice because most things are automated now in most of the world.
Right. And I know you in particular, you're really great about helping buyers if there is a little blemish on their credit, or if there's something that, again, was maybe out of their control for some reason. You're really great about saying, hey, you know, we can fix this. And sometimes it isn't an immediate fix. Sometimes it is a quick fix within a week or so. But you're great about really honing in and helping people figure out how they can improve things so that maybe in 4 weeks they can buy a home. So that's also great too, because again, a lot of these lenders that do these automated, you know, pre-qualifications and pre-approvals, they may not necessarily offer up that information. They just move on. So
no, can't help you. Next. Yeah, they're done.
Yeah, which is really unfortunate. Yeah.
Well, yeah, I mean, it is unfortunate, but a lot of those lenders don't even realize. They think that what they have to offer is the way it is, you know?
Right.
They don't understand that there's another end of lending. So it's not always.
Right. That's awesome. Another question that I wanted to ask is, you know, I deal with a lot of first-time home buyers, and not just first-time home buyers, but other people that are thinking about buying. And, you know, they're maybe very early on in the process. They say, oh, you know, I'm not really looking to purchase maybe 6 months to a year from now. I don't really want to talk to a mortgage lender yet because I don't want them to run my credit. You know, I know that's going to be a ding. And so I just don't really want to even open up that box yet until I'm ready. And why would you say it's a good idea for someone to reach out earlier, say 6 months to a year, before they're actually getting serious to purchase?
It's definitely a good idea to reach out earlier because you can get prepared. Even somebody who thinks they've got everything in order, sometimes I can help them do something to get in a better position when the time comes. And not only that, but everybody's worried about the 3 to 6 points it'll cost when we have an inquiry on your credit. I do credit rescoring. I can actually tell people, I can go in and do what if simulators and all kinds of things with your credit and tell you how to boost your credit way beyond what it's going to cost. Your score. So, but that is a tough conversation to have with somebody because they have preconceived notions already of what they hear and everything. But yeah, I mean, to be honest, usually I help people more than hurt them when I look at their credit.
Well, I know another thing, even you and I have run into with some of our clients together is someone thought they had perfect credit. And there was this, oops, where did that come from on their credit? And again, maybe it wasn't even anything that was to their own demise or their fault. But unfortunately, it has to be cleaned up now and fixed. And that can't necessarily be an immediate thing that happens. So would you say that's another reason that someone needs to way before start getting prepared with that?
Absolutely. I see identity theft. I see ex-boyfriends and girlfriends and spouses open up accounts in other people's names that they didn't realize. I mean, we have all kinds of reasons to do that. You definitely want to be prepared ahead of time. Yeah.
All right. Well, is there anything that I didn't touch on that you can, you know, further expound upon?
You know, I think you hit on everything pretty well. I guess we've hit on everything I can think of right now as far as, I guess the only question mark, and you and I talked about it a little bit, was, is it a good time to buy? And I mean, it's never been a better time. It really hasn't, for a lot of reasons. The competition out there is slim. A lot of people don't have jobs right now, which is very unfortunate, but the people who do could definitely take advantage of the market right now. Rates are at all-time low. You know, I would definitely tell you, if you're able to do it, now's the time if you've been thinking about it. 50 years. I mean, I've been doing it for 20 years. I have never seen the rates this low.
Wow. I know. I think some people had gotten a little frightened because when all of this started, interest rates started, you know, hiking up. And so people were like, oh my gosh. And so then all of a sudden everyone thought it's not a good time to buy because rates are going up. But in reality, I think you and I had talked about this as well. even if rates have gone up a little bit, it's still better than even what it was, you know, at the peak of 2018, when some of those rates were what, above 5 even?
Yeah, on occasion. Yep.
Yeah.
I can tell you over the last 2 weeks, probably the worst possible case scenario I've seen was in the 4s on a fixed rate. So rates are outstanding.
Okay.
Most are in the 3s right now.
Gotcha. Awesome. Well, I appreciate you taking time out to chat with me today. And I know all this information is going to be really helpful for a lot of people. So I appreciate it, and take care, and good luck with all the craziness going on out here.
Well, thank you for inviting me.
You bet. Talk to you later.
Bye.
Bye-bye.